Thank you again, Mr. Chairman, for holding this important hearing. Mr. Baldwin, given that China is years into its pilot program and has expanded its digital currencies availability in more major markets, is there a risk presently that the U.S. Will cede a global economic competitive advantage to China if we do not follow suit and quickly with a digital dollar?
China has many structural issues associated with its central bank digital currency. First of all, being a lack of rule of law, concerns about privacy, as well as capital controls. Those make an unappealing option in the international global sphere if there are no other options. The U.S. needs to catch up to the Chinese development, but when the U.S. presents its own alternative, there's an obvious incentive for the current system to utilize an American-based system.
Okay, given that, let me drill down on a couple of follow-ups. What impact may it, if the United States does not proceed with its own digital dollar, a CBDC, or some kind of private sector-led stablecoin regulated by the government, what impact would that have on the effectiveness of U.S. sanctions should the influence of the dollar wane?
The sanctions authorities and abilities that we are provided are results of the international correspondent banking systems. So the United States' sanctions abilities would be undermined if alternative systems that do not cross through traditional U.S. correspondent banking systems are undermined.
Yeah, and I think Ms. Friedlander also made that case pretty persuasively. Final question to you. Describe the digital dollar CBDC approach versus the regulated private sector-led stablecoin approach. What are the pros and cons?
Yeah, a CBDC approach could take two forms. It could be in a tokenized form, so essentially a digital dollar that's transferable around from different wallets, or it could take an account-based approach. There are a number of privacy considerations that need to be taken into account for a CBDC approach. A private sector stablecoin approach would build on top of our existing financial infrastructure. So that would enable faster payments on a back-end basis and would be primarily opt-in. So banks that are seeking to have faster payment settlements could implement a stablecoin approach to have faster payment settlement times, and then there could be obvious abilities for the private sector to innovate at a consumer level, so providing options for consumers holding stable.
Well, for any of our witnesses, does anyone have an opinion on, in terms of the competition with China and other international competitors, is there a preferred approach, the authentic CBDC approach or the regulated stablecoin? Dr. Levin?
Yeah, I really appreciate Mr. Baldwin's perspective, but I think that the truth is here that it depends on how the stablecoin is designed. If you have a stablecoin where it's 100% backing by reserves held at the Federal Reserve, which is essentially what Dr. Coronado was describing, and it's essentially what Michael Bohr and I have been advocating for quite a few years now. Okay, it's actually a narrow bank, and I know that Chairman Himes is familiar with this issue. Okay, that a narrow bank means that the deposits that a customer makes are held 100% reserves at the Federal Reserve, so it's perfectly safe and secure. And in the kind of payment system we're describing, it can be instantaneously transferred. The point is, if you have a privately issued stablecoin that does not have 100% reserve backing, it's backed by something else, people are going to have questions about it. And this is not the first time in history. There's been other times in the past where there were kind of privately issued currencies and they had different values, trading. There were exchange rates of the different stable coins. We can't have that kind of thing at the center of our...
Thank you for that.
The bottom line here is we've got to move forward with a central bank issued currency.
Thank you for that insight. On monetary policy, Dr. Levin and Dr. Coronado had some views on this. I will have to say Dr. Coronado was a little alarmed about some of the concepts that you're putting out there, and so moving the role of the Fed into a much more powerful role and a more non-conventional role. So with respect to monetary policy, this idea of strengthening the Fed's ability to foster dual mandate of maximum employment and price stability, is there a risk of giving this kind of power to the Federal Reserve to undermining price stability and contributing to, for example, inflation? Mr. Baldwin, do you have a view on that? Dr. Coronado has a view on that. I've run out of time. Nobody's answered that question, but perhaps you all could answer that question in the next round of questioning. And I am intrigued, Mr. Chairman, by the argument that we need legislation. And I would like to know also from the witnesses in the conversation today what that should look like. With that, I yield back.